Hello traders, Des here with Grok Trade. It's Tuesday, September 24th, 2013. Well, after a fourth straight day pulling back, we have a mixed market. As you'll see here, the S&P down about 1/4%, the Dow down almost 0.5%, but we have the Nasdaq up in bullish territory with the Russells up about 1/4%. So you have both small caps and techs leading the charge to the upside, confirmed with the banks being up 0.5%. I'm looking for tomorrow to be a bullish day. VIX dropping, confirming today's bullish move, if you will, but it's dropping 1.6% right here around 14. And we have precious metals higher, not by much here on gold, but silver up more than 0.5%, and you have crude oil down 0.13%, US dollar up 0.2%, transportation index up bullish, giving support to that bearish move that we see here on the Dow. And the defensive sector utilities is down 0.10%. So anyway you shake this, the markets look to go bullish. So we have a nice bullish bull pullback. If you're uncertain what a bull pullback is, go to the website, FairlineTradingEducation.com, click on Chart School once you get there to click on bull pullback. And you have a nice run with a higher swing high. And now we have our pullback. What's interesting here is it's a beautiful bull pullback with a reward to risk ratio right around 2-to-1. On top of that, if we do drop tomorrow, I'm looking for buying opportunities. If the S&P hits 1690, it would be a 38.2% Fibonacci retracement and would be above the 20 and 50-day moving averages, and would be a decent opportunity to buy some longs for a little rally. But it'd be short term. Why do I say short term? Because if you look at this trend line and this trend line, that builds a big fat rising wedge, which is more bearish than it is bullish. And that could be sincerely problematic. So if I were to take this line coming across the MACD, you'll see that there's a slight decrease when we are increasing here on price action. So that's bad news. So I do see a rally here, and I see us smacking our head around 1730 and then dropping after that. So we are certainly keeping our eyes on that. And gold gave us a gap down and pop. And gold could be giving us a buy opportunity right now. If you are interested in gold, this would be the time to be looking at it. Silver, same thing. We're at a support level. Gap down, run up. If we go higher, be looking for buying opportunities on gold. Gold's basically at break even. We have this rising wedge. It did break down, but we're at a support level with a doji and all major moving averages acting as support. If we do pop here, you could get a nice little rally. So Google is a short-term buy. Apple was off by 0.3%. We're up here. We filled the gap. Don't touch Apple right now. Facebook was up nearly 3%, up 2.7%. But you have this big shooting star reversal pattern. It's almost a gravestone doji. We have a gap here. Look for downside. Look for people to be buying or selling into this strength, which you did see on Tuesday. Microsoft was off by 0.9%. A little bull pullback here, gang, but I'm not worried about this. Here on Tuesday, this weakness that we received, people are buying into that weakness, bring it back up. If we start to go higher here, it could be a buying opportunity, and we could get a breakout on this falling wedge. If you don't know what a rising and falling wedge is, or those dojis that I just referred to, definitely go to the Chart School, and that'll help you out. Hey, one of our students, Todd Muffley, the owner of Fat Adam Internet Marketing, is coming up next. Listen to him.
My name is Todd Muffley. I'm the owner of Fat Adam Internet Marketing. I've been in Carmel for 5 years and in trading for about 4. Before mentoring, my trading was erratic and losing. After mentoring, after going through the mentoring process, the biggest thing that I found was a system. And a system that basically said if you follow these rules and you do it religiously, then you will be successful. Mentoring benefits to me were having somebody that you could call on and talk to after the mentoring. I think is important because, you know, it's like going to college. When you go to college, it's great when you have the teacher in front of you, but afterwards, who do you call on when you need advice? So that was a big thing. The other part that I liked about mentoring in the process was that Des goes slow and methodical through the process, and so I never felt like I was being rushed into something that I didn't have complete comprehensive knowledge over before we went on to the next item. Of course I'd recommend them, and the biggest reason why is because just like you have a trading education that everybody wants to garner, I think it's important to have that in a formal platform. Instead of just going out and doing your own research and maybe reading a book here or there, or following a strategy, it's, in my opinion, a good thing to have a comprehensive program which is tried and tested and true, rather than just, hey, you should follow this stock pattern and only trade it. If I was on the fence about it, I would just evaluate my past 50 trades and see how I did. And if I'm a rock star and I'm kicking butt, then maybe I would evaluate it a little bit more. But if my last 50 trades have been shaky, or the wild west, I guess you could say, then I would definitely say it's something that you should look at. The other thing is, just don't believe these testimonials. Actually reach out to the mentors at Grok Trade and figure it out with them, to talk to people individually, so you can get a one-on-one representation from somebody who's been through it as well. So it's not just a quote-unquote salesperson telling you how good it is, but actually learn from the people who've been there.